Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on the gold market. So in general, we discussed the possible reaction of the market on the 1520 resistance. We talked about it in the weekly report, and here actually we were suggesting that it would be nice if market will reach an area around 1490 and then turn up again. Although we have really positive view on the gold market in the medium and long-term perspective, and we think that this consolidation that we see here on the daily in the shape of the channel, or better to say some kind of the flag action, this could be treated as a flag on the weekly chart maybe. So, but anyway, this is some kind of the gradual retracement sooner or later, but it should over, and we suggest that market has more chances to show upward action here. By the technical reasons as well, because it hasn't completed major target on the weekly chart. Fundamental background also stands positive, so we keep our positive view on the gold market in the medium-term perspective. But at the same time, in the shorter term, it seems that we should be ready for a bit deeper price action. Well, at least currently, if you do not want to accept this idea that market will turn down again, you will have to go against the pattern that has been formed on the daily chart. So we currently have suggested that market should drop more on Monday, but there are some patterns that we have on the intraday charts as well. So here it was a really big spike right to the COP resistance on the intraday chart, as you will see, and as we already have talked about, it was really perfect bearish engulfing pattern, which suggests some deeper retracement, and that has happened. But as a result of this retracement, despite that the trend by the MACD still stands bullish, market has formed some kind of the evening star pattern. So it's not really very perfect because this candle is rather long, but it also could be treated as the separate as the shooting star pattern as well. So this is a kind of the when the one pattern includes the another one. But anyway, overall this performance looks bearish, and the shape of this pattern usually has the continuation. It's very often market takes a kind of the ABCD pattern on the intraday chart, so I have talked about it a million times already, where the body of this pattern becomes the first AB leg. So it means that once the retracement will happen, the CD leg also should be formed. The only hope for the bulls that this pattern will fail may be due to the Fed statement, because it will come in the 2 days. If market will not form a real continuation within these 2 days and complete this target of this pattern, well, maybe it will fail on the dovish comments. In this case, market gold could skyrocket and taking out of the stop, erasing this pattern. This scenario has less odds to happen, but we can't exclude it totally. This will be just great solution for the bulls. Meantime, as you take a look at the 4-time frame chart, take a look. The market stands in a very tricky moment. So that's the trend lines that we discussed in the weekly report as well. This is the former resistance. Now it's the support of this downside channel on the daily, and market has broken it up. But that is the engulfing pattern that we discussed in the weekly report. After minor pullback, this collapse was happening is really strong. Now market stands at the support. First of all, this is 618 support 1490 of this most recent upward action, and also this is the trend line support. So holding above this area and starting upward action and taking out of this stop will reestablish the bullish context. In this case, we have to acknowledge that pattern probably will fail. But if we suggest that we wouldn't have any Fed on the horizon, in this case, I would suggest that we probably should get a kind of the ABC reaction to the downside. That makes it a bit tricky try any attempt to take long position currently, and I think that it's not good point right now for that. Also, due to the fast action that has happened yesterday. So here's momentum stands against the bulls. And in such circumstances, despite the market stands in the minor support, well, that's not sufficient context for taking the position yet. Because now, although that engulfing pattern is completed by this drop, its minimum target is completed. But currently we have the pattern on the daily, which tells that all this action is just the pattern itself. So, and it also will need the continuation. Here's approximately how it could look like if Fed will make no impact on the market. So take a look. Based on this engulfing, market has completed the OP target. Overall action down was really strong. So currently, this market stands at the agreement support. As you can see now, it's also in agreement because OP target stands right at the same fib level, 1490. Market stands in the pullback. And two levels to market could reach the 1496 first resistance, 15 even, it's actually confluence, where market theoretically could reestablish downward action and could keep going right to the XOP initial ABCD pattern, which is at 1478. Alternative scenario could happen if market will show the deep retracement, for example, to the 1507. In this case, we could get different action. It's this one. It could be ABCD, which could complete the XOP, and we could get the larger AB equals CD with the same targets, which stands approximately at 1480 area. That's the different scenarios that we have on the table right now. Although you could try to take the long position here if you want, but only if you trade on the intraday charts, not on the daily. Because on the daily, with this background that we have, I mean evening star pattern on the table, it's not really safe trying to take the long position based on with this pattern on the back. This is not good sign for a bullish scenario on the daily chart. On the intraday chart, well, maybe it's possible, but if you have the really near standing target, I suppose not greater than the 15 even. For the bears, you could watch for these resistance levels. If market will form some bearish pattern, you could try to use it for taking the short position as well, based on the daily pattern. I mean daily evening star. That's the tactical trading that we could follow in the nearest 1-2 sessions until we will get the Fed statement. On the Fed statement, well guys, it depends on your personal view on the market. Somebody likes to trade fundamental events, statistic releases, others not. So that is very personal, and this is your own decision. But here's most tricky moment is that Fed could cancel the technical setup that we have, I mean the pattern. In this case, market really could reestablish the upward direction right from this point and just taking out of the stop. If you're sure that this will happen, well, in this case you could try to take the long position and just keep the position until the Fed statement. And just check this out, whether this will happen or not. So I just show you what really risk stands around the current situation, around the long position in the current moment. But you will have to make your own decision on how it's better to deal with the market. So just repeat the same thing, that if we wouldn't have the Fed, I would not take the long position currently, because we have the clear bearish pattern that suggests another drop, at least for $10-11 per contract. But Fed, as I said, is additional different external driving factor which could really make strong impact and cancel the bearish pattern that has been formed recently. So now it's your question that you have to answer is, would you like to rely on this external driving factor, and would you like to follow it? If you also think that it could be bullish for the gold and it could cancel the bearish setup that we have. If you do not ready to follow it and you are not believe that this will happen, in this case it would be better to sit on the hands and do nothing. So that's the solution that you have to make.